Hi all. So towards the end of 2024, which is a current calendar year, the markets have fallen again and the panic has started kicking in once more. So Nifty is now once again closing under 24,000 and the US market also has fallen by more than 6% just in the last 10 days. So yes, everyone is panicking, but in this video, I want to set some context on first thing, what is happening in the stock market right now. Then second, get into why it is happening, mostly related to the Fed interest rate change. And third, getting into what is happening with the stocks right now. And fourth, what is the future going to look like for investors and what should you be doing? Right? We'll also be looking into a positive forward-looking statement towards the end of the video. So make sure you watch till the very end because this is going to be a very short and very value-packed video. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So let's start with what is happening now. So a 3% drop in Nifty and a 5% drop in Bank Nifty have been seen from the recent swing highs. Okay, so if you're looking at Nifty's chart, I'll remove all the lines here. Nifty is already down from its all-time high. It's already down nearly 8.5 to 9%. But that's not what I'm saying. From the recent high, just in the last 3 to 4 days, Nifty is down by 3.5%. And similarly, Bank Nifty is down by 4%. And the US market has come down 6% from its all-time high just in the last 2 weeks maybe. And it has closed in red for the last 10 straight trading sessions. So I also quickly want to show you the US market chart, right? This is how it looks. A massive candle yesterday. But also if you're looking at the larger market also, it has been falling consecutively for the last many days. I don't know when is the last time that the US market fell for 10 trading sessions straight, right? Just looking at this chart, it's not even visible. Such a chart is not even visible, right? So this is what is happening even in the Nasdaq, which is a tech heavy index. It has fallen very sharply yesterday by more than 3.56% is what it has fallen yesterday. Right. So this is what is happening in the US market. This is what is happening in the Indian market. And this is why people are kind of in a panicking mood. Right. And panic in the market because of Fed event and its announcements. So all this fall, all the reasons for this fall can be traced back to just one event which happened yesterday at 2 a.m. Indian time. It was a Fed interest rate decision. Right. So let's quickly get into that. So I don't want to waste much time here. I just want to quickly skim through what did Fed announce and just giving you a certain sense that why the market actually reacted the way it did. Right. So the US interest rates have been cut again. So interest rates being cut generally is positive for the market. Interest rates have been cut by 0.25% and it has come between these two levels, right? So that's where the US interest rates are lying right now. But why did the market fall? Is not because of this interest rate cut. They hiked their, the US Fed, which is sort of like the RBI of the US, they have hiked their inflation outlook for next year from 2.1% to 2.5%. Okay, they're expecting inflation to go back up, and that's not good for the world's largest economy. And third, only 2 expected rate cuts in 2025. So, analysts were expecting 2025 again to be a year of rate cuts. So, US, in India, this 4.5% interest rate might not seem like a huge figure, right? So, here we have 5-6% interest rates, but in the US, this is still a big number. So, 4 interest rate cuts were expected in the year 2025, but now the Fed has said that they'll only go ahead with 2 possible interest rate cuts. Again, the government is changing. Donald Trump is coming back into power. So a lot of things are still uncertain. But just this announcement alone has caused a lot of problems in the market. Then the question is, how did Indian stocks react today? So stocks like Reliance, Tata Motors, Britannia, HUL, etc. and a lot of other stocks, they are back to their swing lows. Some even back to their 52-week lows. Right? So I'm just talking about blue chips here. And you can look into your portfolio, your holdings, and you can see that many of them slowly, maybe over the last 1-2 weeks or very sharply today have actually fallen out. But there are good things happening in the market as well. First one, pharma giving breakout, IT strong stocks still remaining strong despite weak opening. So I'll quickly show you the chart of pharma index, right? So if you type in CNX Pharma here in TradingView, you can see that a beautiful chart has been formed. You can imagine a trend line here. So I'll go ahead. Yeah, you can imagine a soft trend line here. So pharma has given us very strong breakout. right? And on the other side, IT stock also. If you're looking into the IT index, it started off with a huge gap down, but now it has recovered despite the initial bearish, very bad opening. The IT stocks have recovered. I think even Wipro, like if you're looking at Wipro, it's even back to its 52-week high. Right. So that's a real positive indication for the IT sector. So what's happening here with the Fed announcement and everything, the rupee has depreciated very, very sharply. I think the rupee is at an all-time low today. It has touched 85 against the dollar, which is a unprecedented, or it's the lowest ever in rupee's history. Right. So pharma and IT actually enjoys the rupee falling and the US market remaining kind of stable. So with these two things, right, with the expectation that the growth in the US market will continue, which Fed had said, and the rupee falling, both of them together gave some boost to pharma. IT had some bearish opening, but still has recovered and closed decently. And also, mid cap and small cap indices are resilient, but weaker stocks still seeing fall. If you're looking at lower quality stocks, they will definitely get punished in a market like this, right? Every time you see a market correction, right, the first ones to fall will be the weaker stocks. So make sure you have that in mind when you decide to get into the market, when you decide to do your fundamental analysis and to start investing in stocks. I also quickly want to highlight that Nifty is back to near testing its 200 days exponential moving average. Okay, Bank Nifty is still a long way away. Bank Nifty has been positive or very strong over the last 2 months, but Nifty is back near its 200 days EMA, and mostly you can see that Reliance has been the major contributor. So in one of our previous videos where we talked about blue chip stocks to invest in, multiple stocks we gave a positive outlook, we gave levels, talked about it, and Reliance, we said that beyond a certain level, right, beyond a certain level is what you have to watch out for, but it never crossed that level, right? So just somewhere around 1380 was that level, but Reliance never managed to cross that level. Similarly, if you're looking at other Nifty 50 stocks like Tata Motors, it has also fallen very, very deeply. We had said that, hey, Tata Motors should cross 200 days EMA with a lot of strength, right? We had said it somewhere around here, but it never managed to do that. It always kept going down, and you can see where it has ended up right now. So just talking about Nifty and its level here, the swing low 23,270, which was both the election period high zone, right, and the recent swing low. This will be very, very important for the stock market, right? So you'll have to see that Nifty will take support there. Or if it does not, right, the next easy target for Nifty on the downside could be 21,800. But if Nifty is still remaining strong and crossing, again, crossing the swing high, which is 28,900, 850 to 900 is going to be super important. If those levels are being crossed, I think we are up for 25,600 and even 26,400 very, very soon in the Indian market. So again, Nifty is now around 24,000. On the lower side, I'll be looking at 23,250 for a larger move, and on the upper side I'll be looking at 24,850 for a larger move. But despite this, in between, the trades will still keep on happening. That is okay, but a longer term view is what I've just said here. So now that you understood what is happening to Nifty, what is happening to the US market, we looked at important charts, important levels, and possible directions that Nifty could go in. Let's look into what should investors do. Right. So the first thing is look beyond Nifty if there are interesting stocks which have potential. Okay. So what's happening now? Nifty is not really showing that resilience that mid cap and small cap are showing. Right. Despite Nifty having a really good PE ratio right now and mid cap and small cap being slightly overvalued, still a lot of mid cap and small cap stocks are showing promise. So the very recent one bull rally that happened was in BSE. So with all the SEBI changes and the SEBI circular coming out, BSE would be enjoying the business which is coming into their derivative segment. And because of that, stocks like BSE, they've been really strong, and you have pullers and draggers in every market. So make sure you watch out for stocks beyond Nifty, right? Beyond Nifty, mid cap and small cap, you can watch out for. But again, as always, make sure you give proper, adequate exposure only. Don't ever put in 100% of your money into small cap or mid cap or even a single stock. I've seen people do this. So make sure you have that in mind. If cautious, wait 1 to 2 days for the US market to stabilize with the current higher VIX environment. So if you're looking at the US market right now, you can see that it has fallen very, very sharply. Okay, it has its supports, it has everything, but I think it's okay if you want to stay and wait for 1 to 2 days, especially since the VIX, if you're looking at the US VIX index, it has gone up by 30% just from last night. Right. So if you're a conservative investor or a conservative trader, I would suggest that you can wait 1 to 2 days till the US markets actually cool down and give that indication. And third, make sure your goals and investments are aligned for long-term growth. Be prepared for patience. Right. So Nifty is right now near the 200 days exponential moving average. This is around the zone where investors and institutions tend to accumulate. Right. So it's not a completely crazy idea that Nifty could sort of take support from here. But be understanding that the larger macroeconomic scenario and the larger earnings not doing well and the Fed interest rate scenario, those are larger concepts that need to be understood much more in detail. In fact, we're going to discuss that in today's podcast. You'll be seeing that tomorrow here in this very channel. So make sure you get subscribed to Market Feed and watch out for the Aftermarket podcast. So again, be prepared for patience. Don't look for V-shaped growth or V-shaped recovery very soon. Be prepared for maybe a consolidation or maybe a sideways movement in Nifty or even slightly bearish for the upcoming many months. And the last section here is I want you to look beyond the negatives. Okay, FII activity has remained stable in December. If you're looking at the FII DIA money control page here, you can see that FIIs have been net buyers for 3,701 crores this month. DIAs have bought for 11,000 crores, and this is despite November being huge selling pressure, 45,000 crores, and October being the crazy month that it was, with more than 1 lakh crore rupees being sold by FIAs. Okay, December is seeming very okay compared to both November and October. But I want to highlight the next part here. DIAs are still sitting on cash. So recent study by ICICI had shown that November data said a mutual fund's cash pile is now at 1.8 lakh crore rupees. Now that is November data. Okay, again in December, a lot of money would have been pumped into mutual fund by retail investors like you and me. And in December, they have bought only 11,200 crores from the cash market. Okay, DIA data is mostly mutual funds and insurance companies data. So you can see that December there has not been a lot of pumping by DIAs. So I wouldn't be surprised if this number is now about 2 lakh crore rupees. That is how much cash they're holding into, expecting that the market will stay like this. But there is still potential. So because they have this huge cash reserve, whenever there are dips, there will surely be some buying by the DIAs. And whenever the market starts performing again, it could be a really strong trend. So I'm very bullish on this fact here. And again, the third point, be greedy when others are fearful. I don't want anyone to be stupid when others are fearful, right? Because sometimes it warrants or that situation necessitates that you be fearful. But in times like this, when the entire market is not falling, and especially in times like pharma stocks doing well or other sectors doing well, try to find out those gems which you think could perform in the next 3 to 6 months while the rest of the market could stagnate, right? That is what you should be looking into. Be intelligent and greedy when others are fearful. So that's it for this very short video. I wanted to give my 2 cents on Nifty falling right now, the US market's performance, and the hope or the fear that investors have of what will happen in 2025. We know that the upcoming union budget might create a lot of impact in the market. That's going to be roughly in 1 month and 2 weeks. So make sure you have your eyes out for that. I am expecting January to March for Nifty to be a consolidating quarter. That is my personal expectation. But still, I'll be looking for gems like the pharma sector right now, or stocks like BSE and Wipro, which have been performing really well. I'll be looking out for gems like that in the current market also. So hope you got some really good value from this video. As always, comment down below if you have any thoughts or suggestions or even discussion points that you want to start with me here in the comment section. This is Ajay Ajith signing off. See you all again in the next video. Bye bye.